Hi, Lara, Elliott Wave Forex with your free US dollar index Elliott Wave analysis for the New York trading session dated Monday the 7th of June. Starting this analysis with a look at an historical chart just going back 3 years. We'll have a look at primary degree waves. We had 5 waves down for primary C, 5 waves up for primary 1, an expanded flat correction, a 3-wave structure for A, B, which reaches beyond the start of A, and a long strong C wave to end primary wave 2, down at the end of 2009. Thereafter, we've had a pretty good trend change for the dollar. We're in a primary third wave to the upside, which must reach beyond the end of 1, so we have a minimum upside target to look for. The dollar must reach above there. But targets to the upside for the dollar, for the long term, 91.91 is where this primary wave 3 will reach equality with wave 1. It's likely it's going to be quite a bit longer though. So a more favoured upside target may lie about 102.87, where primary wave 3 equals 1.618, the length of this wave 1. Within this primary third wave, we've so far had intermediate 1 and 2. We're working on towards the end stages now of intermediate wave 3. When that's over, we'll have a 4th wave at intermediate degree that cannot reach down into wave 1 price territory. So this is an invalidation point for this historical chart, 82.22. When that 4th wave is over, we'll have the last and final push to the upside to end this primary third wave up to those targets I just gave. Taking you now to a chart just for the last 6 months where we're looking at these recent dollar rises, where this black 1 and black 2 is this black 1 and black 2 down here. And here's our intermediate wave 1, nicely contained in a trend channel. I've drawn it here using Elliott's channeling technique. A trend line from 1 to 3 and a parallel copy placed on 2 pretty much contains this movement. When we have a clear breakout, we know that 1 is over, and the next wave in the sequence, 2 follows 1, is then underway. This also nicely contained in a little trend channel, although I haven't drawn it here, has a very, very obvious breakout to the upside. 2 is over, the next in the sequence, 3 is now underway. Within intermediate 3, or black 3, we've had 1, 2, a long extended 3, and 4 was a barrier triangle that ended just about 3 or 4 days ago. Working now on wave 5 blue, the last leg up of this intermediate wave 3. Targets for the upside for the end of this. Intermediate or black wave 3 will reach 1.382, the length of this wave 1, when the dollar reaches up to 91.17. Also, at minor degree within this intermediate wave here, blue wave 5, when it started just down here, will reach 2.382, the length of this wave 1 blue, when the dollar reaches up to 91.07. So that's how I've worked that upside target out. It's just 0.1 difference, 91.07 to 91.17. Taking you now to an hourly chart for the last 20 days, where we're going to have a look at this structure here, this barrier triangle for this 4th wave at blue or minor degree. Oh, before we go there, we're able now to use Elliott's channeling technique on this piece of upside movement, a trend line from 1 blue to 3 blue. Draw that and then create a parallel copy and lay it on the orthodox end of wave 4 blue. This contains intermediate or black wave 3 to the upside. We may expect upwards movement. Often in my experience, 5th waves end somewhere midway between these parallel lines and a parallel trend channel containing a wave's movement. If it moves up through that, we'll look the next likely end for this 5th wave at blue degree could come to lie on this uppermost trend line. But most importantly, we're going to be using this trend channel to alert us when this upwards movement is over. We will see a full day's bar opening and closing below the lower edge of this parallel trend channel, and that will give us confirmation that wave 5 blue and therefore 3 black in its entirety is over, and we're in a correction to the downside, which will be wave 4 black, and as I said before in the historical chart, cannot move down below 82.22. That's why I have the invalidation point on the daily chart at this point. Technically, all we need to see now is a 5-wave structure to the upside on an hourly chart. At that stage, it could be over any moment. So trading this one to the upside, set stops pretty close, perhaps a trailing stop, trade as you trade it to the upside, and just be aware we do have a trend change coming up that's going to see the dollar in a bearish trend probably for a few weeks. This intermediate wave 2 is remarkably shallow and very, very brief. They do usually last quite a lot longer than this. They usually last several weeks. This one did, and this one so far has as well. So this is very unusual, and I would expect our fourth wave coming up to probably be quite a bit longer and deeper than the second wave. Okay, let's go to the hourly chart now, where this A, B, C, D, E is here. A, B, C, D, E, and this point here, D, is 0.04 higher than this point here I've labelled B pink. It's a barrier triangle, and B and D are ending at essentially the same level. This upper trend line, this blue line here, is essentially flat. If this was much higher and this trend line had an obvious upward trend to it, then that would invalidate the barrier triangle. But as far as I can tell, for barrier triangles, D can end slightly beyond B, but essentially at the same level. So I don't know where the invalidation point for that one would be. I think you just have to use your eye and judge, is the line flat or not. So we had a 5 waves most likely down here for A, a 3 waves with a long strong C up for B, a really obvious ABC, probably an ending contracting diagonal here for C, an ABC, really obvious 3-wave structure for D, a nice exaggerated ABC 3-wave structure with a truncated, slightly truncated C to end wave E pink here, with a very nice overshoot of the AC trend line, as triangles very, very often do tend to do that. Thereafter, a trend change back to the upside for the dollar, with so far a 1, 2, a nice long strong 3, which is just 0.1 short of twice the length of this wave 1, so a reasonable relationship between those two. Working today on an A, B, C correction to the downside for wave 4 green. Still got a little bit down to go probably. Technically, it could be over here, it could be truncated. That's just fairly unlikely, so I would expect a little bit more downwards movement, probably coming to lie on this lower green trend line, but not below 87.26, so here's our invalidation point on the hourly chart. Wherever wave 4 green ends up, the next wave is going to be to the upside, some good upside movement for the dollar, probably in next New York's trading session, as New York seems to be the one moving the main trend at the moment. And it'll probably be about 0.93 to the upside in length, and that's where wave 5 green will reach equality with wave 1 green. So that's probably coming up in the next 24 hours. Whenever that next wave 5 green is over, we then will have a correction back again to the downside. That cannot move beyond this point down here, 86.33. So at that stage, our invalidation point will have to move from this end of wave 1 here to the beginning of wave 1. This will be a 1, 2, 3, 4, 5 waves up to end one wave up in its entirety, subdivided into 5. Wave 2 can reach right down to the start of 1. So we could see, technically it could reach down there, although a turning point is often around about the 4th wave of 1 lesser degree. So I'd look for that for a turning point. We'll try and get that one updated for you tomorrow. That's all from me for your US dollar index analysis. If you would like in-depth and accurate Elliott Wave analysis to help you in your Forex trading for the euro and or the pound, you'll find it on my site, elliottwaveforex.com. Hope everyone out there had a great weekend and have an awesome day, guys.